I'm breaking it down in plain English. What each structure means, who they are best for, what they cost, and how to avoid expensive mistakes later. Hey there, this is Samy from Boston Company. If you're a tech founder trying to figure out whether to start as a Delaware C-Corp or a California LLC, you're not alone. This is one of the first big decisions you'll make, and it can impact everything from how do you pay yourself to whether an investor says yes. So in this video, I'm breaking it down in plain English. What each structure means, who they are best for, what they cost, and how to avoid expensive mistakes later. Here's how I'll break it down. Why does your entity structure even matter? Because it impacts every aspect of your business. Your taxes, how much paperwork you deal with, whether investors will take you seriously, and even how do you pay yourself down the road. This isn't something that you wanted to backtrack on later. It can be expensive and messy to change entities once you're already up and running. So let's break it down. Okay, Delaware C-Corp. It's the go-to for venture-backed startups, structured to scale fast, familiar to investors and accelerators, comes with double taxation. So you have a corporate tax and personal tax if you decide to take dividends or salary. And it's formed in Delaware, but if you're operating in California, you also register as a foreign entity in California. So we're dealing with 2 filings and 2 fees. California LLC, on the other hand, it's great for bootstrapped founders. It's simpler admin and tax setup, pass-through taxation, so all your profit and losses pass straight to your personal taxes. But investors hate LLCs. They're harder to invest in, more tax headaches for VCs. And it's also not scalable beyond a certain point. Okay, so let me give you 2 quick founder stories. Founder A, he is a bootstrapped AI developer. He's solo, building an app, making about $150,000 in gross revenue. No investor yet. So in that case, a California LLC give him simple pass-through taxes, fewer legal costs, and no extra Delaware compliance headaches. Founder B, on the other hand, she has a SaaS company with angel investors. She got $100,000 pre-seed lined up, and she wanted to go into Kickstarter. So she had to switch from California LLC to Delaware C-Corp because angels wouldn't invest in LLCs. Delaware legal system gives investors that confidence. So if you plan to raise capital, start with a Delaware C-Corp. But if you're bootstrapping or consulting, start lean with a California LLC. Just know that you will likely convert later. Okay, now let's talk about money and admin. I'll start with the Delaware C-Corp. The formation fees in Delaware, plus that you have to register as a foreign entity in California. There is an ongoing franchise taxes in both states, require a registered agent, and you must file corporate bylaws and stock issuance, board minutes, all the time, all the startup stuff. California LLC has a minimum franchise tax fee. It's normally $800 minimum franchise tax each year. But here's an update. For LLC formed between January 1st, 2021 and January 1st, 2024, Franchise Tax Board waived that $800 annual fee for the first year. So if you are formed during that window, you saved some cash. After that first year though, the $800 minimum kicks in regardless of the revenue. So even if you make 0 in year 2, you still have to write that $800 check to the Franchise Tax Board. And here's a bonus tip. This waiver doesn't apply to Delaware C-Corp registering in California. You're paying from day one the $800. So if your dream includes VCs, angel investors, or accelerators, like Kickstarters, go Delaware C-Corp, period. Investors don't want to be a member of your LLC. They want preferred shares, they want liquidation rights, and all that good stuff, the structure that only C-Corp gives them. So let me put it in a different way. If you're bootstrapping now, no outside money, California LLC. But if you're raising money going to Kickstarters, probably Delaware C-Corp. But if you want flexibility now and will incorporate later, you may want to start with the California LLC but plan to switch later. My advice is don't just follow the crowd. Look at your next 12-month, projection. Are you going to raise or are you building revenue quietly? If you're unsure, we help tech founders pick the right structure every week. So please reach out and let's talk it through. If this helped, hit like and subscribe for more financial tips for tech founders. Drop me your questions or tell me what's your biggest pain in figuring out your structure. In the comments below, I respond, I read all your questions, I respond to each one. I just want to thank you so much for watching, and I'll see you in the next one.
This has been another episode of our tax-saving video series. If you enjoyed this video, please like it, subscribe below, and share with other business owners. You can find previous episodes and more information at www.bostacpa.com. Thanks for listening, and have a great day.